Mary, hang on a second. I think that microphone might have clicked off. I need you to turn it back on.
Oh, how testing? Is that good?
There you go.
Can you hear me? Okay, great. Excuse me. So today I'm going to go over 4 key elements for successful trading and option trading using weekly options. And I'm going to go through some of the things I like to incorporate in all my trading, and I'm going to go through plain breakouts, how to let winning trades come to you, favorite trading tools, which I like weekly options and futures, and I'm going to really concentrate on weekly options, and how to get significantly higher returns using less capital. So first off, I'd like to put up my disclaimer. This is educational for purpose only today, and so let's get rolling. If you've not ever been to my site, please go there, powercycletrading.com, and you can get my free ebook here, which is 15 top option trading strategies that I like to use. So highly recommend that you check that out. Let me see here. One second. Just trying to put it in there for you. So you can get that free ebook. I've also got another one, a really good one on futures. So you have two ebooks you can check out there. And then just for the crew that's here today, I'm having a special, which I can go into a little bit more detail towards the end, but it's a really great option trading course that I've developed. Will help you select your option strike prices for spreads or single options. It's a really great course. So you can get it today here for $97. It's normally $247. So, and that's again on that URL that I just gave you, powercycletrading.com/special-offer. So first off, let me give you a little background on who I am to tell you where I'm coming from. Over the past 3 decades, I've been actively trading the financial securities markets. I was executive vice president for over 10 years for one of the largest international alt trading companies in the world, and I managed their international alt trading securities trading group, where we traded and managed billions of dollars worth of oil, foreign exchange, and financial market derivatives. My group was one of the first to trade over-the-counter options on cargoes of foreign crude oil, and I literally traded millions of barrels of these option contracts. So I've been trading options. That was back in the mid-'80s. I started trading on cargoes, and from that point on, I kind of got hooked on options. My quest has always been to develop a system that worked regardless of what the markets were doing, and this is what I've done at PowerCycle Trading. I've put together what I've learned over many years of trading and experience, and I've created a 4-step trading model that we use for all of our trading at PowerCycle Trading. And it costs my members a whole lot less than what I was paid professionally to trade. So it's a great system that I've put together. It's what we use in our virtual trading room each and every day. I also wanted to interact with other traders, so I introduced a live trading room using our trading model for futures and options. And trading is not just about your trading model or trading methodology. It's a never-ending journey of learning, and interaction with other traders is an essential part of this learning process. So the exchange of information and ideas is a huge part of the progression of becoming a successful trader or even a great trader. So today I want to share, a few trading tools and secrets that I've put together and accumulated over the years to pass on to you guys, and hopefully it'll help you in your trading. So what are these essential tools? First off, I like to incorporate trend lines to identify breakouts. And within our trading model that we use, we incorporate trend lines, and we have these, automated. But I'm going to show you here today a way to correctly draw trend lines, which can make them mechanical, and you can, actually automate these into your trading system. So basically, supply-demand dictate price movement, and the use of trend lines are universally used for construction of trend lines, but they're very dissimilar from one person to the next, causing for a very subjective type interpretation of where to draw the lines. And I use a rule-based trend line setup, and what I use is what I call pivot points, which marks drawing, makes them drawing mechanically and systematic. So I'm going to go through that and show you how to do this in order to make it systematic the same way each and every time. So basically, human nature often interferes in proper construction of these lines. We are kind of accustomed to review the historical price activity of a market from past to present with dates reading from left to right from your chart rather than right to left. Now, intuitively, this is incorrect, and price activity is definitely more significant in historical movement. So precision and accuracy demand that the lines be extended from right to left, with most recent data or price data appearing at the right side of the chart and then going to your left. So I'm going to go through some examples here to make it real simple and clear to you. So basically what a pivot point is for, say, a supply pivot point is when you have the price high is not exceeded by a prior price or price immediately after. That's a pivot high. So here's an example. So we can go through here, and if you look at this chart, like I said, you want to go from right, not from left. So take your most recent price, come in here, find this pivot high right here. So that point is higher than the bar before, higher than the bar after. So this is a whole data point. This is a 5-minute chart. So you can do it on any time frame. Then go up and find your next pivot point. So here's your next one. It's also above the one before and after. Then you intersect and cross. So in our trading model, we had a long signal here, and I had a trend break here. We had a big move to the upside. So I love it when I have my model shows me along. I have a trend line. Most of the time, you're going to get some high momentum off that break to the upside. So that's one example there. So here's another example. Now we have this automated. So if you have these rules, then you can program it, make it automated into your system. So here's another pivot high here. Here's another pivot high. So here's your supply line automatically drawn. My model goes long here. See a trend line break. Boom. Great setup. And this is on a 5-minute chart. Here's another transport ETF. This was on a actual weekly time frame. So again, from right side of your chart in, here's your pivot high. Here's another pivot high. Extending the line down. Model goes long. See a trend line break. I like to wait for a little bit of a break. I don't want to, buy right on the break. Give yourself some space, because if it's a powerful momentum breakout, you can get in a little bit late. If you get in too early, you can have a false breakout. Here's another supply line. This is on a 400 tick chart, so intraday. Here's a pivot high, extend the line down. You got your supply line. Nice little breakout to the upside. Now the demand pivot points is just the opposite. It's when the lower price, you have a lower low, lower than the prior price and the immediate after. And this creates your demand trend line. So here's another example of this. So here's your, again, most recent price. Don't start over here. So, you could start, if you're starting back here, you could start at a lot of different places, but you want to go here to this pivot low there. You can see it's lower than that point, lower than that point. Then look for your next pivot low down. It comes all the way down here. Got your line. There's your demand pivot. Boom. Nice momentum to the downside. So if you do this each and every time, you make it mechanical and you don't make a different line. It's always the same each and every time. And again, then you can program this if you're into that and make it automated. So here's my pivot low from right to left, pivot low down here. Now I have a pivot low extension here, which offers me additional support. So I have all this automated in my system. So this is on a weekly demand line. You can see here it breaks down. It had a nice move to the downside. Now here's just another example of Baidu. Here's your pivot point low, first line, second extension. So that's a key. That's one of the elements that I use for my trading because I want to identify breakouts, and I like to trade with direction. So how to let winning trades come to you. First off, you want to have a plan that governs all your actions. You want to be disciplined in implementing to that plan. You want to be able to be patiently waiting for the highest probability trades based on whatever model you trade or methodology you choose to trade. So allow the trades to come to you instead of chasing trades. You want to create structure in your trading with set goals, rules, time frames, work hours, and risk control. You want to make your trading a business, not a hobby. So be very focused on it and treat it like like any other business. Be very disciplined about it. Now, these are all simple guidelines, but sometimes the simplest things are most difficult to put into action. So I would recommend that if you can, use a trading model or system where the rules are clearly defined. This makes it easier to implement those rules. Now, we used the model I developed, the Power Cycle Trading Model, and it's a rule-based system based around 4 really powerful indicators, and it tells us price cycle change, and it does this by defining price range, price volatility, change in price cycle momentum. And this, provides us a set of guidelines which allows us to, let the trades come to us. So whatever model you use, know the guidelines and rules and stick to them. Pull the trigger based on your system. So another thing that I like to do is for all swing trades or just trades in general, I use 2 to 4 different time frames for all trade setups. And this is what I call a trade confirming process. And this kind of really gives you that additional discipline too to allow for non-emotional trading. So the end result of these elements using in your trading is that you make decisions based on your model you're using, not the emotions of fear and greed that often sabotage, your trades, leading you to overtrade or give back profits. So that's something I'm constantly working on is over. So when I tend to chase or overtrade, that's when I usually lose and give back my profits. So now I'm going to just briefly show you, what I call my secret trading system. And this is something that we put together based on our trading model, and we've got this scanner that we're releasing this week. And what we can do is we can take the internal elements of our model, and we can scan across, all the different stocks, ETFs, and then we have a matrix, and then it's based on a various scale of numbers that we use, and we can scan for volatility, squeeze, cycle, low, high type of trade setups, and it really helps us to identify trades and to be waiting and put them on our watch list and get ready to go before they happen. So here's kind of a look at the watch list scanner that we have. Now we've currently got this set up for Thinkorswim currently based because we've modeled this in ThinkScript, but it's a great tool for us to help us find breakouts. And here, breakouts are cycle low high trades. So here's a kind of a typical look at, pull up the charts that are attached to it. You can see this is what we call a volatility squeeze, where you get the volatility coming in. You can see price consolidation. We have trend lines automatically drawn in there, breaks to the upside. We have some other key elements, but it's a proprietary, so I can't show you those today. Here's another screenshot of an Apple squeeze right here going on, and we had trend lines here, and you can see break to the upside. So this is a tool that's been very helpful to us for identifying trade breakouts that we can then take advantage of through the use of either futures or options, weekly options, preferably for me. So now I'm going to get into my favorite trading tool, which we use a lot. We trade a lot of futures, but we also, when we get the right setup, we'll look to trade weekly options. And so I'm going to show you first the benefits of these weekly options. I had a question: is this TradeStation? The model that I was showing you, that was on Thinkorswim. Now, my trading model can be put on any platform, but the scanner is based on Thinkorswim because that's how we've got it programmed using ThinkScript. So what are the benefits, the big benefits of trading weekly options? Well, they now account for probably over 12% now of the 300 million option contracts traded every month. They're relatively new, but they should be, shouldn't be overlooked because they offer you huge opportunities. Some of the more exciting stocks are, Google, Apple, Netflix, these type stocks, which are high beta, high cap, stocks that are pretty expensive. So, when you can take advantage of take advantage of weekly options, it offers you a great opportunity to be able to trade some of these higher priced stocks. So they come out each Thursday and then expire the next Friday, 8 days later. The U.S. Option Exchange in 2012 also expanded weekly options to, rather than 1 week, to 5 straight weeks for groups of stocks and ETFs. So now, instead of, it was coming out weekly, now you've got 5 weeks for certain stocks and ETFs, so it gives you that many more trading opportunities. So here's just a kind of a screenshot of an Apple option chain. You can see here you've got a weekly now for almost consecutive every week. So you can do all kinds of really cool option trades and everything for Apple and some of the others each and every week, rather than having to wait for a weekly and then a monthly or something like that. They're cheap. Weeklies are cheap. Since expiration is within days, weeks, or even hours, you can purchase at-the-money weeklies for as little as actually $2 to $10. They have unlimited profit potential, anywhere from 500 to 1,000% or more is regular versus, a monthly option contract. They're easily traded securities. On some of the stocks are very liquid, so you've got plenty of liquidity for it. And by using weeklies, you've got 52 times a year of more profit type opportunities to take advantage of these kind of low risk weekly options. Now, weeklies, in my opinion, are for everyone. Options have kind of managed to get a bad reputation over the years, despite being used by practically every professional investor out there. And a lot of this has to do with the education that's offered for options. We use what I call the practical way of trading options to teach option trading. And it's a simple approach which focuses primarily on the option delta and then market timing, which in my opinion, is the key element to successful trading, is to have good directional timing on your trades. So if you have that, and we have incorporated that with our trading model, then it allows you to look at various option strategies based on your timing or directional model. So for really great directional trading, weeklies can be a very great benefit to you if you know how to use them. So I'm going to go through here just the significance of higher returns with less capital that weeklies offer you, and I'll show you some great examples to give you a nice idea or illustration of how they can work in your favor. So when I'm swing trading or day trading, if I see a good setup, I will definitely want to use a weekly option because it offers you leverage at an extreme low cost. And so to understand it, you just need to understand basically the basic mechanics of leverage through options. If you're directional trading, you don't have to get that much into the Greeks as you do, if you're non-directional. So if you have a good, system that you're using or methodology, and it's a directional type of thing, you can use that and incorporate weekly options. So basically, to understand options, you just need to understand that the value of an option is determined by time value times implied volatility times the extrinsic value. And by using the weeklies for day trading or swing trading, we have been able to better utilize the beneficial factors of the time decay they involved, volatility, and option delta. And this has kind of created a forceful triple win trading situation for us. Then, by combining the accuracy of our model, we can look for strategies or breakout type trades using weekly options with our directional trading model. Now one key element is that you need to understand time value, and here's a graph to illustrate time decay and how it accelerates. So each Thursday you have a new weekly option comes out with 100% value of time in it, and it exponentially falls off until 0 8 days later. So you have to be willing and understand how to deal with this time decay in order to work in your favor, not against you. So here's another table to kind of illustrate what this looks like going forward on a price model. So here's your Thursday. When it's released, you've got 100% time in your option. Here I just put in some variables here: implied volatility of 300, intrinsic, extrinsic, constant 1. So you get your premium of $300. Friday it goes down by 1/8 or 12%. Then 0, so you can see how this impacts this one variable component impacts, when you have change in implied volatility. Even in the applied volatility goes up here on, say, a Monday, and your pricing value of your time decays